Nvidia, the AI chipmaker, jumped 9% Thursday. That same night, Marvell Beat Too and fell 7% instead. Here's what decided the difference. Thursday was a broad rally. The S&P 500 fund rose 0.64%. The Nasdaq 100 fund, loaded with tech, jumped 1.2%, its best session in weeks. The Dow added 0.17, small caps 0.32. We said Nvidia reclaiming 212 would confirm trust in its 70% growth forecast. It closed at 228, up nearly 9%. Hit decisively. We named Micron and Western Digital, both memory chip makers, as names to watch, expecting Wednesday's rally to continue. Instead, Micron fell 1% Thursday, Western Digital nearly 2%, while Nvidia surged 9%. Three companies beat earnings this week and rallied Thursday. Nvidia, the AI chipmaker, up nearly 9%. Salesforce, the cloud software company, up as much as 22%. CrowdStrike, cybersecurity, up as much as 18%. Then Thursday night, a fourth beat, Marvell, which makes custom AI chips for Google's data centers. The stock fell 8% instead. Nvidia guided 70% growth next year. Wall Street expected 44%. Marvell's beat was smaller, and its stock had already nearly tripled this year. My read: the market forgives a margin warning only when the growth number is big enough to justify it. Coverage led with Salesforce's huge earnings beat, adjusted profit up 80% from estimates. But $2.53 of that came from a stock gain on its investment in Anthropic, the AI company, not new business. Strip that out and core growth was 16%. Real but far less dramatic than the headline. One name today for a fact, not a feeling. Marvell builds custom chips for Google's AI data centers. Thursday night it flagged, quote, significant acceleration in that business. Yet the stock sits down 2.5% this morning on margin worries. Google's own contract requires up to $120 billion in purchases through 2033. That number matters more than one day's move. Bottom line, Thursday was a broad, earnings-driven rally. Nvidia, Salesforce, and CrowdStrike all beat and jumped, while Marvell beat Too and fell, on nothing but a margin warning after nearly tripling this year. The fear gauge dropped to its calmest level in weeks. But individual investors got more bearish anyway, a real gap worth watching. For levels for today, Nvidia, hold $220 and Thursday's surge has legs. Slip below it and some of the pop fades. The fear gauge, stay under 14.5 through today's Fed speech from new chair Kevin Warsh, and this week's calm survives a Fed event. A jump above 16 says his words moved markets more than any earnings report did. Brent crude, hold 85 and the oil bounce continues. Back below it and Wednesday's drop wasn't done. And the bears. Next Thursday's investor survey either reverses off 44%, a timing blip, or climbs further, meaning retail saw something the options market hasn't priced in yet. Subscribe for tomorrow's recap. Educational content only, not financial advice.